our Q2 and first half financial results. Just to remind you, some of the statements in these reports are forward-looking, and they should not be construed as any promise of future performance. Right now, we have Makar Stoyanov, who is Maib VP Finance and Maib CEO Designate, and me, Evgeny Risovich, representing Investor Relations. So I will pass on to Makar for the presentation of the overall executive summary of the Q2 and H1 results.
Yeah, thank you, Evgeny. Hi, everyone, and happy end of the summer. If you go to page number 3, Evgeny.
Can you see it now?
Yeah, but go page number 3.
Okay, hold on, I'll reshare it.
Yeah.
Can you see page 3 now?
No.
Okay, is it on now?
Yes, now it's okay.
Perfect.
Good. So, hi again, everyone. Let me quickly give overview where we stand in Q2 and H1 of the current year. We have had another quite strong quarter performance. If we look on the macroeconomic highlights, we have a GDP growth around 0.4, so it's quite low, but we expect and our model as well says that in Q2, which we'll get to know a bit later, it will be higher. And if you look on the overall year, GDP forecast is around 1.5%. There is quite some deviation between the different players, and it ranges between 1.3% up to 2.5%. If you look on the inflation, it's an upward trend. In July, it was 6.3. So if you look on January, it was 4.9. That upward trend we expect also to be continuing till the end of the year, and that's also what National Bank mentioned. Still, it will be below 10%. If you look on our strategic highlights, we reached quite an important milestones of over 1 million of Maib Bank users. We have over 1.7 million of the cards in circulation, and what is important for us as we move to online or mobile, over 85% of the deposits, retail deposits as a number, is done online, and over 84% of the loans, cash loans, are also done online, which is quite achievement for us, and we are going to work on this further to increase it even further. We focus a lot on the payments infrastructure, and you see that we also increased POS and e-com terminals. We reached 27.7K, and we have close to 400 ATMs. All in all, that brought us strong financial results. ROE-wise, we are 21% in H1 2026 and 22.7% in Q2. Asset growth continues. If we compare year-on-year, it's 16%. And if you look on the gross loan, it's over 22.7%. Also, we have had the AGM a couple of months back in Q2, during which the shareholders decided to distribute as a dividend around 402 million. So it's as a range around 20 million euros. Or 3.88 local currency lei per share. Now, Evgeny will play back on the macro, and I'll come on the strategy and financial performance.
Yeah, thank you, Makar. So, as Makar has mentioned, we had rather sluggish growth, GDP growth in the first quarter. However, we expect some uplift in the coming quarters, and we already get the
Evgeny,
results.
the slides are not being changed, if you can.
Okay, what about now?
No, it's the same as a...
Okay, hold on. Can you see slide number 6 now?
Yes, it's okay. Yeah.
Okay, so just as Makar mentioned, we had rather sluggish growth in Q1. However, we already see early reports that the agricultural production has been better than last year, which will be evidenced in the Q3, which typically in Moldova is the biggest GDP quarter. In terms of inflation, inflation was down somewhat in July to 6.3. However, most recently, just at the end of last week, NBM has published updated inflation forecast, which suggested that uh, they expect inflation to peak at 9.2% in the first quarter of the year before going down towards their target corridor in 2027. So far, this week, we've already seen the increase in the gas tariff of around 40%, which should weigh quite significantly on regulated prices in the second half of the year, which is exactly why NBM has upgraded their inflation forecasts. In terms of the GDP forecasts, most forecasters have downgraded the GDP forecast. Most recently, just at the end of last week, Ministry of Economy have also downgraded their GDP forecasts. All the forecasters, however, expect that in 2027 and 28, Moldova will return to some meaningful growth. In terms of debt to GDP, it remains rather low, although we've seen some increase in budget deficit in the first half of the year. Um, as far as inflation goes, the National Bank of Moldova responded with 3 consecutive rate hikes, bringing it to 7.5 base rate, most recently on the 6th of August. Um, other important things are maybe forward looking. Most importantly, we've seen the change in government. The new government has quickly come up with a set of priorities, including the new fiscal reform, um, which has higher taxes on certain areas of consumption. It also has an increase of bank tax from 12 to 18% of income tax on banks, so-called solidarity tax. So the parliament will vote on these reforms in September. So these are not yet finalized. We will still
Yeah.
need to see.
Sorry,
Yeah.
if you move the slides, we're still on slide number 6.
Yeah, I'm about to move it. So are we on 7? Yeah.
Yes, yes.
Yeah. Okay. So as I have covered already, GDP forecasts have been downgraded. Um, However, in 2027 and 28, the economy will is expected to restart its growth. Fiscal numbers are relatively good. Debt to GDP at just under 37%, but the budget deficit kicked up to 4.8% of GDP. Um, just to continue with the fiscal situation, the government has accelerated issuance of the short-term paper, almost double on 2 years ago, and the rates have peaked now above 10% annual on both the 6 months and 1 year securities. So the debt, this internal debt, is becoming quite expensive. Um, now, going back towards inflation, as you see from the National Bank has acted quite rapidly, increasing the base rate by 2.5% starting in May to August. And based on their most recent statement, they will continue with their hawkish stand. The biggest risk to inflation forecast, in their view, relates to the Middle East situation, which has direct impact on energy, and energy is one of the largest components of CPI in Moldova. In terms of the banking system, it has continued a very healthy growth. Um, so total capital ratio in Moldova at the end of Q2 was 24.3, which is one of the highest among the peer group. The banking intermediation has grown quite substantially. Over 2 years, it increased from 75% loans to deposit, from 60% loans to deposit ratio to 75% loan to deposit ratio in Q2 2026. We've also continued to see quite steady asset growth, and Makar will cover that in the second part of the presentation. In terms of real estate, we continue to see the prices going up. However, activity is gradually declining, which suggests that perhaps these prices need to be reset a little bit. Going towards the external trade, we've seen quite a good positive picture in Q1, thanks to last year's good agricultural season. As a result, exports have increased by 17.7%, outpacing imports during the quarter. There's been some decline in remittances, 1.9% year on year. However, remittances continue to be quite an important source of foreign currency to Moldova. Foreign reserves remain stable at 5.2 billion euros. The NBM currently switched to euros from dollars, so foreign reserves remain stable. Now, just to cover once again the most important events during the quarter and beyond, was the stepping down of the previous government cabinet. This was mainly relating to the scandal surrounding unauthorized pay at some of the state-owned enterprises. And as a result, new government has been installed, which already came up with a number of proposed reforms, which will be voted by Parliament later this year. In terms of Transnistria, maybe this also needs to be mentioned. Now, Transnistria preferential tax regime will end on September 1st, and companies from Transnistria will have to pay VAT and excise on imported goods in Moldova, which should help Moldovan budget, but it will definitely lead to some tension in the Transnistria. That said, we don't expect this to be anything significant. Now, I will pass the microphone back to Makar to talk about bank overview and strategy, and then financial results.
Yep. So let's start a bit of the strategic perspective. If we look on our market share, we slightly decreased in June of the current year versus June last year. It's mainly driven by some of the evolution of on the asset side and type of on the legal entities. Still, if you look on the euro in absolute value, we increased by 300 million euros. Market share on deposits, it's slightly down, but it's also because of volatility and seasonality of some of the big corporate clients. Key statistic, I already mentioned that we have a quite strong ROE, 22.7% for Q2. Cost income ratio is below 44%. If we look on the net profits, is over 28 million euros. And all this in the context of very healthy portfolio. NPL ratio on the IFRS is 0.7, while NPL coverage is over 470%. And as you see, we also ensure that we manage the net interest margins, which stayed flat around 5% in Q2. If you go to the next slide, you'll see overview of our strategic themes. These are the same, but the level of granularity and the exact topics which we tackle are a bit different from one period to another. We talk about customer experience. We invest a lot as resources and the focus on leveraging data and step-by-step AI to ensure seamless customer experience and also hyper-personalization. If we talk about digitalization, important to highlight that in Q2 we start scaling up at scale the mobile banking for legal entities, which is SME, corporate, and micro. and we're continuing doing it with enhancing stability and focusing on bringing live more and more functionalities. So bank functionally moved to the new mobile banking for legal entities completely 100% in Q2 of the current year. Branch offloading is a focus for us. As I mentioned, over 85% of deposits and credits are done online for retail. And of course, payments is ensuring really secure and efficient delivery of the transactions. Here we focus a lot not only on the issuing part, which is card over 1.7 million, but also on the acquiring side of payments. On the next slide, we give a bit of flavor of each of the key areas. On slide number 15, you see also operating highlights. Now, we've been named the best Moldovan bank by Euromoney, but also maybe the best bank in Moldova by Global Finance. If we look on the money, the funding which we bring in the country, we are proud to say that we brought and we're still bringing over 190 million euros, which we have signed agreements in last quarter, and agreements with our standard partners, EBRD, EFSI, and GGF, to which we're really thankful to. We also, as I mentioned, reached an important milestone for us, over 1 million customers, 1 million of citizens of Moldova, customers of our mobile application. And as already Evgeny mentioned, one of our colleagues from supervisory board resigned, Vasily Tofan, due to movement to another position in the government, which we, of course, very proud of. Now, on slide 16 is a bit of numbers behind those strategic focus areas. Card circulation increased. What's important, you see that the number of transactions increased exponentially. So versus last quarter, Q1, number of cards increased by 100,000. But if you look on the amount of number of card operations, it's increased much more. So we see that people really started using at scale more than 50% cards and the card payments for day-by-day life. POSs, as I mentioned, payments overall is our core focus. We invest a lot and we expand. Over 27.7 thousand POS and e-com points is ours, and we have the biggest market share. Cash transactions as a number increases, as a value is 93.2, but also as a value is over 50%. And the retail My Bank users also over 1 million. DAO with 38%, which is close to the best-in-class players worldwide. And we're focusing a lot. And also we first place top of mind and third place across all the brands, love brands. So it's not only banking, but all the brands in Moldova, but in banking, we're also the first place as a love brand. On the next slide, I will play back the financial results. Profits have increased 24% quarter on quarter and over 33% year on year. ROE-wise, over 22.7%. And if you look on H1, is also 21%. Net interest margins, I will highlight a bit later, is despite the challenging environment where interest rates are going up and we need to balance the rate of growth on the assets and liability sides, we managed to keep it 5%. So if you take versus last year, it's flat. But if you compare to the previous quarter, it's 0.1 percentage points higher, mainly driven by remuneration of the minimum reserves, which have increased, but also the rates for the government securities and also some loan books. Cost income ratio has improved both quarter on quarter, year on year, but also H1 versus current versus last year. And all this in the context of high liquidity and stronger capital adequacy ratio of over 22%. And that is after we incorporate part of the profits undistributed from the last year, after we have approved the dividends payout ratio in AGM. On the next slide, you'll see evolution of our loans and deposits. As I have mentioned, we have kept market share at 37.5%. We have increased loan book across all segments. What's important, what we are proud of, you see that if you look at the SME portfolio, we reached 10 billion local currency lei, which is quite a milestone for us. And if you look on the corporates, it's a similar story of growth, and that is across both working capital and investment loan. But what's good news for us is also that investment loans are growing at slightly higher pace. Retail performs well, and the momentum which we have built a couple of quarters ago is continuing, and we have reached 19.1 billion lei loan book on the retail side, driven by both consumer loans but also mortgages. If you look on the deposit side, we compared to the Q1, we slightly decreased by 2.2% or percentage points. The reason being is because of the quite seasonality in the some of the deposits and current account of legal entities, and that you see also in the numbers below. If you look on the retail, in fact, it's a continuous strong increase. So it shows the trust which customers have in us keeping the money. But if you look on the way we have decreased the value of the loan deposit in current account is mainly corporate. The biggest one, and that's because, as I mentioned, we have a couple of big corporate clients for which the behavior and the keeping funds in the banks is very seasonal. So they consume it during the winter, but accumulate during the summer, that accumulate during the winter. For SME, it's a very similar story. We have specific segments like agro, for instance, which is start using the cash in Q2 2026. On the next slide, you will see the overall performance. But if you go to the next slide, what it is driven by, here is on next. Here you see next. Do you see net interest income increased also in Q2? Plus 4%, and it's driven by both. It's driven by the growth in the interest earning assets, but also by net interest margins. So net interest margins increased by 0.1 percentage points, but the interest earning assets also expanded close to 6% quarter on quarter and over 22.7% on a yearly basis. Important to highlight here that you see cost of funding has also upward movements. Again, as Evgeny mentioned, we have a slight increase in inflation going up, and as a result of repricing, the cost of funding is moving up. At the same time, yields on loans and securities is flat, Q2 versus Q1. Probably it will be some upward movement as well, but at this stage, we try to keep it very tight given the competition which we have in the market. On the next slide, also non-interest income, which is around 1/3 of our operating income. It has increased by 10% in the last quarter. Now, if you look on the key drivers, I think this time we had a very good net fee and commission income. Again, it's important to emphasize it's quite seasonal. And if you compare to Q2 of the last year, it's more or less flat. Still, the pressure on net fees and commissions, given the all kind of caps and quite tight competition between the players in the markets, we have a pressure on the net fees and commissions income. If you look on the exchange forex income, it's being improved versus last year, but also slightly versus Q2. Here volumes are being on the upward trend and will increase, but the marginality of the business of the transactional forex bid-ask spread is quite tight and under pressure given the challenges on the market. If you go to the next slide, as we have mentioned, cost income is quite a focus for us. This time we have improved it up to 43.9%, so it's a downward trend. It's quite seasonal, so I think it's on the lower side of the curve. But in any case, the operational performance, which we measure through cost income ratio, is being strong and improving versus last year. If you go on slide number 23. And all this increase and strong performance on the loan book is in context of the strong good NPL ratio. NPL is down 0.7%. Cost of risk is 0.2%. Here, we want to emphasize that we have moved to a new, more upgraded risk model based on the FLIs, forward-looking indexes. And as a result of that, we have one-off provision releases and we see the cost of risk 0.2%. But all this, in any case, is very safe, and we have NPL coverage ratio of over 470%, and the reserve ratio, so ECL ratio, is 3.1%, which gives us quite confidence that we are well covered for any potential credit risk events. Next slide is about the liquidity and capital. I mentioned it earlier that capital adequacy is over 22%, and that's significantly above our minimum regulatory requirements, which is 18.43%. Tier 1 is 19.5, again above minimum regulatory requirements of 15.5, which are in any case one, if not the highest requirements from the region. RWA density is an indicator which is under our control and we manage carefully. It slightly increased to 55.7%. Here is a matter of the structure of our loan book and also increase of the guarantees of the balance sheet products in Q2. And all this in context of high liquidity coverage ratio, which is 247% in end of June. I think that is it from our side.
Yeah, thank you, Makar. So at this point, we will take questions if there are any. Write them in chat or raise your hand. We will allow you to speak. So it seems like there's no questions. Apologies for the technical difficulties. They happen sometimes. Thank you very much for following our results, and hopefully see you next time.
Thank you very much. Have a nice day. Bye-bye.